Hi, I Chandrasekhar Tilak welcome you all in this episode of Market. This would be a bit lengthy compared to my earlier episodes on both counts. First, the time consumed as well as the topic covered. Because today I wish to cover a topic titled as Sensex at 52,000. Certainly, it was a classic example of a paradoxical economic situation or its adverse or a reverse relationship with the Indian capital market. Of course, globally, it is always a topic of discussion, if not a high and hot debate, whether any stock exchange barometer is a classic example or an indicator of an economic situation prevailing. After spending almost more than 3 decades in this field, whether it is a BSE or a SEBI or NSDL, whether it is from policy side or from implementation side, I have realized one thing, that one can't forget that economy is always a result of a past and a present elements. Whereas market undertakes this particular situation as a background and try to view the market how it would be in future. So I jocularly say that economic status is a two-dimensional, whereas market and its movements are always three-dimensional, if not more. And when a dimension changes, certainly the parameters and the paradoxes change. Very recently, in a completely different example, we have realized it. Our famous actress Juhi Chawla tried to compare and contest a 5G thing, and it was thrown away. And that's why we jocularly said that a first ever charge of 5G for Juhi Chawla costed 20 lakhs. The similar question can be asked that whether a minus 7.3% of a GDP growth rate was at the cost of 52,000 Sensex, or whether 52,000 Sensex was a paradoxical repartee as far as minus 7.3% GDP growth rate is concerned. Certainly, being a proud Indian, it pains me when I note that my GDP growth rate is the worst ever for many decades at 7.3. And I do not know whether it comes as a solace or it adds salt to the injury when I see our beloved BSE Sensex crossing a level of 52,000. Certainly, the corona has not gone away. Certainly, corona affected economy whether at a local level or at a global level, via national level, has costed me as my individual regular income is concerned, and thereby my levels and consistency of investable surplus is concerned. And that's why I personally feel that whatever we have observed as far as the developments in our Indian capital market is concerned, it's just like running on a treadmill. When we go or we run on treadmill, virtually we are trying to be where we are, but even then we are running for the same. But one thing is sure, that when I host myself on a treadmill, it is out of my own volition. Whereas whatever I am surfacing and witnessing at this juncture as far as my economic treadmill is concerned, it has been foisted on me, it has been foisted on me, and it is against my will. And that's why I always feel that when I see the movement of BSE Sensex being at a highest level of 42,000 in a calendar year 2020, and at a lowest level of 26,000 in the same calendar year, namely 2020, and when it crosses as 52,000, whether it is a riposte of a market to say that positive future is waiting me. And under such circumstances, one question always prevails. If that is case, that market is moving from 42,000 to 26,000 to 52,000, who at the hell is investing in this market? And if someone is investing, why he is investing thereinto? So beyond the political connotations and contours and colors of it, I would try by witnessing you and keeping you as my witness. I am using the word witness, I am not using the word hostage as far as this particular episode is concerned, why my market is at 52,000. It is not a justification. I am not holding brief on behalf of market. I am neither holding a brief of any government or the anti-government forces. But being a person, certainly an employee, or in the role of an employee, associated with Indian capital market for exactly 32 years, I feel that there are certain positive green shoots. Not only as far as my economy is concerned, but certainly some sort of a positive recognition as far as my Indian capital market infrastructure is concerned. And that particular feeling is getting strengthened day by day over a period of time. And certainly last 12-13 years, last 12-13 months, which has been afflicting as far as my economy and my investment sentiments are concerned, these positive green shoots are helping me to be glued to the market. One and most foremost thing need to be noted is that the corona gift, namely the work from home, is a trendsetter as far as our Indian capital market is concerned. It was not that in a pre-corona days we were not investing. Albeit the number of shareholders in our country is a bit less. It has been estimated that we are in the vicinity of 6 to 7 crores out of a population of 135 crores of our country, that we are really investing in equities directly. If we add a mutual fund portfolio as an individual name, barring certain multiple portfolios, even then this particular number would not go beyond 20 crores out of 135 crores. If we compare this figure with an incremental 63 lakh trade income demat accounts opened in last 17-18 months, a stark contrast emerges. Believe me, because this is the highest ever speed our depository and trading accounts have witnessed. As I have said that I have been associated with Indian capital market since June 88, whether it is BSE or SEBI or NSDL, I have seen the rate at which, or the annual rate at which, the trade income demat accounts open. So under any circumstances, applying any parameters or the yardsticks, these 63 lakhs in a single trading year is a huge achievement. But it is not the only shade or feature as far as these 63 lakh accounts are concerned. Majority of them are active trade income demat accounts is the real contribution as far as this 52,000 Sensex is concerned. And that particular thing was necessitated by the effect or the worst effect or the impact our corona had on our regular income. Whether I am employed or I am unemployed, whether I am seasonally employed or I am permanently employed, if not a complete cancellation or a cessation as far as my salary income is concerned, certainly I have seen salary coming in installments, salary getting bit delayed, salary coming in parts and pieces. Under such circumstances, although my income was getting reduced or is getting delayed, beyond the point I was not able to delay or postpone my consumption. Under such circumstances, my need for regular income got accentuated. And when I was working in a pre-corona days in my office, it was not that my working hours were restricted from 9 to 5. My younger generation, who is contributing more than 58% of my GDP by way of a services sector, whose average employee age is 25 to 30, have worked for hours together. And they are doing so even in a work from home. But one major change is that this particular generation, this particular age group, who are having some investable surplus, was badly in need of income surplus or a regular income in last 15 to 16 months, which was affected by economy. And when they were working from the office, because of the Income Tax IT Securities Act or the Information Technology Security Act, many of the capital market related sites were not accessible. But when now this generation, or at least the people or the group of people who are attuned to the market are now working from home, on one hand they are getting connected to the office system by way of their PCs, desktops, laptops or the iPad. At the same time as they are now using a personal network or a domestic network, they are getting connected to my market sites by way of their smart mobiles or their smart handsets. And this continuous exercise and access to the market is a basic boon or the reason as far as this 52,000 Sensex is concerned. Because market has provided this regular income to them. And it is self-complementary or the mutual complementary system per se. On one hand, their consistent trading volumes have given them a regular income as far as the investing public is concerned. On the other hand, such kind of a consistent supply of a demand as far as the securities are concerned have given some sort of a boost to my secondary market. Under such circumstances, the question who and why are investing in this market gets answered by this first facet. But this is the starting point, this is the trigger, this is not the end point of a story. As far as this nature and composition of a regular income which this market has given me for last 7 to 18 months need to be deciphered further. And once I start deciphering it, I am getting another economic peculiar phenomena. Generally, when we talk about a regular income, it is always revenue-typical in the nature. But as far as last 17 to 18 months are concerned, it is both in the nature of a capital appreciation as well as in a regular income. Regular income is consisting of a trading income as well as regular income is consisting of my dividend income as well. Capital appreciation is certainly a gap between my buying rate and selling rate. That has been going on. But if it starts taking place very frequently, it turns into regular income. Because in a classical economics and in classical investment studies, we feel that whenever it is a capital appreciation, I am referring to some sort of a medium-term investment or a long-term investment. But as the advent of my economy moved from agriculture-dominated economy to service sector-dominated economy, this trading cycle itself has gone down to a great extent. I am running 62 years of age now. When I passed my graduation way back in 1980, my commerce professor, my accounting professor, my economics professor have taught me that anything up to 3 years is a short term, 3 to 5 years is a medium term, above 5 years is a long term. If I start telling this to my younger colleagues, because when I was serving with NSDL, more than 150-200 people were reporting to me and average age was 26. I am having 2 sons at home. One is aged 33, another is aged 25. So whether at home or at in office, till in my entire career, I was also in that company of that age group. If I start telling this age group of up to 3 is short, 3 to 5 is medium, above 5 is long, they would not only laugh at me, they would say that I have gone mad. Because for them, I am buying today and selling tomorrow is long term. I am buying today morning and selling today evening is a medium term. And I sell before I buy is a short term. All these kinds of opportunities have been provided by my market, and this is getting complemented by way of capital appreciation. And as my need for regular income kept on fluctuating in last 17 to 18 months, I have adopted all these strategies. In between, central government came to rescue to some extent. They informally advised the government sector companies, according to the news reports, that government sector companies should not pay only the final dividend at the end of accounting year, but in between they should keep on paying the interim dividend as well. And it got percolated. It got percolated to many private sector companies as well. And as I always say regularly in my training programs, which I started conducting from June 2020, virtually every Sunday morning for 2 hours I do conduct it. And I also provide investment advisory services for portfolio restructuring under my City Suggest. I have kept on telling them that look at the dividend, and certainly this dividend income has increased as far as the last 18 months are concerned. Because when a company gives a dividend, whether it is a special dividend, whether it is an interim dividend, whether it is the final dividend, and when the quantum as well as the frequency of such dividend payouts increases, it gives 2 signals. Number 1, company is profitable. And number 2, not only company is profitable, but company is charitable enough to give you make a shareholder into that by way of sharing a profit. Just imagine or count the companies who have given you the interim dividends, who have given you the final dividend, and who have given you the special dividend as well. But again, the market has shown me to be a discriminatory. When a company gives me a special dividend, just because it is coming out of a business, market treats them separately. But when a company like Larsen Toubro gives me an interim dividend by way of a special dividend out of a sale proceeds of a business unit, but they say that I could have given you 35 rupees as a special dividend, but I am giving you only 18 rupees as a special dividend because I am 17 rupees I am going to utilize not by paying you a special dividend, but by retiring my high cost debt or putting in money which are on verge of break even. You would realize when this company made this kind of announcement, L&T share was trading at 800 rupees and this market it is trading at 1900 rupees. Is it not a classic example of a combination of both capital appreciation and a regular income? And such shares are getting traded as far as these new 63 lakh accounts and previous more than crore of accounts are concerned. This is why my market is at 52,000. But this particular opportunity is not restricted or is not created only by my domestic investor. When a corona broke out on a global stage somewhere in February, March 2020, central banks of various countries started parking their liquid funds in a gold. But in between, when this particular first wave webbed and second wave was yet to commence, in order to accelerate their economic cycles, they started liquidating their gold standards. They started liquidating their gold stocks. They needed a safe place to park their funds. And my institutional infrastructure by way of efficiency of a trading and settlement cycle provided that particular place. That gets witnessed. When I say today, I boast today as a country that my country is having a highest ever forex reserve since my independence. It is estimated at $590 billion. Very recently, Reserve Bank has said that we are on verge of $600 billion and Reserve Bank of India is confident that during this current financial year, we will cross this level or a stage of $600 billion. As all of us are quite aware how cautious Reserve Bank of India is always as far as the future statistics is concerned. But when a governor of a Reserve Bank says this, it says that it's a foregone conclusion. Of course, it was witnessed way back, even in a first outbreak of corona. It is not merely a coincidence when Reliance Jio was able to garner more than 8,000 crore rupees in a short span of time, even when the corona was at its peak. And Reliance Jio was not the only example. That means if a company from any particular economy is able to demonstrate by action, not by words, but by action, that they are having a sound project and they assure you a professional commitment, money is not a shortage. Probably this kind of a confidence has been given by my market. I am giving this signal, my market is giving this signal for decades together. When my capital market was rocked by bomb blasts in 90s, even immediately on the next day, we became operational. But when Twin Towers in America got crashed, they were closed for trading for more than a week. And that was the trigger for this economy. And in last 18 months, I have said that each and every country except India were forced either to enhance or enlarge their trading cycle or extend their settlement date. Not a single such instance has happened as far as Indian capital market is concerned. Whether to attach to Modi Nishtha or not is entirely up to you, but market has demonstrated. So this kind of regularity as far as your cycles are concerned gives a classic example. And not only this gives a classic example or assurance, it also takes away a fear or a psychosis from my mind whether this particular trigger as far as Sensex rise is concerned is based on any economic mishap or irregularity. Because since 1990s, our market has given a signal that whenever Sensex goes up beyond a particular any comprehension, then the trigger may be some sort of a mishap. Harshad Mehta, Ketan Parekh are the classic examples of this. But when you are having so many trading volumes, not skewed in few hands, not skewed only in local hands, and most importantly, not skewed only in favor of a handful of scripts, willy-nilly, directly or indirectly, market gives a signal that boss, comparatively, I am at safe hand. The word comparatively is important. But when the compass of this word comparatively is much larger compared to many other countries of the world, not only my forex composition, not only my institutional efficiency, not only my infrastructural regularity, not only my settlement mechanism or smoothness, but a combination thereof gives us trigger and existence of a 52,000 level Sensex. And certainly these are not limited extents as well. There are various other reasons which might have contributed to it. super forex reserve and super settlement system does facilitate and enhance these possibilities. But there are certain other factors as well at a foreground as well as a background which propels the Sensex or any market indices at a level of a 52,000. I do know that a mere number of a 52,000 is not a comparable figure because many global indices are already in 6 digits and I am not. Even when any optimist person in my country is posturing anything, it is in the level of 60,000 by end of this year, 62,000 by end of next year. I am not again in 6 digit. But the question is not of a digit, question is of a direction. And if we are ready to assume and approve a theory that economic status is the accumulation of past and present, whereas a market Sensex is the accumulation of a past performance, present outlook, present status as well as my future outlook, I would need to concentrate on many other factors as well. And that's why I said work from home is one of a trigger. And it is certain whether there is a corona or no corona, this trend is going to continue. Thereby, my excess income is going to continue. It is going to continue to have some sort of a regular income. It is going to have some sort of a consistency as far as my trading volumes are concerned. But in order to have the trading volumes, you need to have the scripts with you, new as well as existing one. Over here, our primary market has played a huge role. If any one of you have attended my training programs which I conduct regularly, as I said before, since June 2020, you would agree with me that I am pointing at this particular possibility for months together. Just imagine that from 1st of January 2020 till 31st of May 2021, by way of a primary market, we have raised more than 48,000 crores. The composition of a primary market of not only our country but anywhere is such that where I can individually invest, but if I have to come out of it, I am not able to do it. I have to do it only at a stock market or a secondary market. So this continuous flow of IPOs by way of a primary market and its compulsory listing on the stock exchanges is giving me much more trading opportunities. And that's why you would have seen during the last 1 year or so that each and every IPO has not got a good response. But whatever IPO has got a good response has got a good trading volume itself. Take a classic example out of it. As we say that in last 17 months my primary market has garnered more than 48,000 crore, there is only one single company from government sector, that is Mazgaon Dock Limited. And when that Mazgaon Dock Limited public issue got closed, I was quick to say that it would get traded at a particular level with a consistent price as well as a consistent trading volume. And if that happens, that would be the another candidate as far as the further round of disinvestment is concerned. And very recently we have raised the note that, or read the news that now Mazgaon Dock has been entrusted with a task of building 7 new submarines, and that may be another candidate as far as the further round of disinvestments are concerned. If we can extrapolate this situation of a business potential getting converted into a marketing potential, and if we extrapolate this entire combination to a private sector play, the picture becomes very clear. And whether private sector or a public sector companies are tapping the primary market like this, the mutual funds would not be far away. It is not merely a coincidence that in last few weeks, more than 17 NFOs from a mutual fund stable have hit the market, and they have cornered and garnered thousands of crores. According to the SEBI regulations, once any mutual fund scheme has garnered the funds from investors like you and I, they have to invest in a market in a time-bound manner. Is it another trigger for a 52,000 Sensex? Just see the composition of NFOs. Right from dividend yield scheme on one hand to a global fund indices on the other is becoming a possibility. All such issues, because of a regular income, are getting traded. As I have indicated in one of my earlier videos on my YouTube channel, Chandrasekhar Tilak, virtually not even the mutual fund NFOs are getting traded. Because in NFO, I am getting a mutual fund unit at a NAV of 10. Certainly my opening NAV would be much more than 10. And now willy-nilly, each and every mutual funds come is an exchange traded fund, so I am able to book that profit. People are wise enough, shrewd enough, wide enough, and most importantly, accustomed enough to book this profit and park it or invest it in another good opportunity. So these interlinkages between primary market IPOs, interlinkages between the mutual fund NFOs and its resultant trading volumes is another reason and the psychology and philosophy as far as 52,000 Sensex level is concerned. Government is augmenting it by way of disinvestment, private sector is augmenting it by way of NFOs, IPOs, and mutual fund is augmenting it by way of NFOs. Under such circumstances, supply of securities giving you the up-to-date economic status are not far and are not far off as well. So such far away situation from a far off factors is another trigger or the genesis as far as my 52,000 Sensex is concerned. So not only the trading opportunity, not only the capital appreciation, not only the regular income, it needs to be understood. Now dividend has started playing another role. Not only government is persuading to give it, but as I have been promoting that particular theory, that a common man like you and I should use a technique of reinvesting the dividend income in either in the same script or in another lodgeable script. Virtually mutual funds are displaying it by way of a NAV. IPOs are investing it by way of a NAV. So not only Reserve Bank of India gives 99,000 crores as a special fund to the central government without naming it as a dividend, it clearly has the impact as far as the fiscal deficit are concerned. And when a government says in the same way that yes, my GDP has progressed by way of a negative 7.3, but I am able to contain my fiscal deficit in a most revised budgeted estimate, it is a unique and representative example that as government is receiving or relying on such kind of extra income which is unconventional in nature, probably an individual investor like you and I is becoming much aware of it. And it is getting an added feature that till now, the foreign institutions and foreign individuals were investing in my market. But now, Indian like me, sitting in my own country, is able to buy the shares of Facebook and Amazon. Such facility was not available to me before. And now people have started tapping it to such an extent that some of the recent mutual fund NFOs have straightway say that they are investing in foreign market. They are investing in foreign indices. Under such circumstances, the term asset allocator is really getting widened, not only in depth but also in its reach. So this is some sort of a horizontal as well as a vertical expansion as far as my investment sentiments and my investment sensibilities are concerned. After all, market is nothing else but a play between sentiments and sensibilities. We may say in a later one that Sensex is neither sensible nor sexy. Continue today, the Sensex may not continue to be sensible, but it is far away from a situation where I can't call him sexy. Because as the age changes, even a concept and dimension of the word or the adjective sexy changes, and that's what market is displaying now at 52,000. If I am able to look at it from another angle, we could see it another way. The way or the extent of pledge of shares as far as the promoters are concerned. It is working in both the ways. First and foremost, as the market has gone up, in earlier stages of my market recovery, the number of shares getting pledged by way of the promoter is getting reduced. Because as I said earlier, if someone has pledged the shares at the lowest level of 2020 at 26,000, and if he is evaluating it now at the level of a 52,000, virtually the number of shares to be pledged for the same amount is getting halved. Because of that, my liquid stocks in the market goes up. It doesn't mean that each and every promoter who is reducing his pledged stock or is allowed to reduce his pledged stock is going to trade in his market. No. But that gives us a sentiment. And because that allows that particular investor or the promoter to raise the fund, and if we see that market discounts the future, probably 52,000 is a combination of my present factors and the future factor. Such pledging of shares has given another connotation altogether. Because of these raised Sensex, not only we have seen the figures, but when we read into the newspaper that in the coming months the number of shares getting pledged may be rising again, that is clearly showing that by way of pledging the shares, promoters are expanding as far as their capacities are concerned, as far as their companies is concerned. Is it not a niche trigger as far as the Sensex is concerned? Probably these factors are prompting people to say that index may be at a particular level by end of this particular year. Not only the number of pledge of shares is happening as far as the market is concerned, it is giving signals by way of two more factors. First and foremost out of this is the growing instances or the rising instances as far as the split of face value of shares are concerned. Only those companies go and resort to the split of face value of shares who are ready to allow a rising trading volume. Such rise in trading volume gives another rising opportunity or the trading opportunity as far as the people seeking trading regular income is concerned. So it is complementing each other. And that company only goes for a split of face value, or only that set of company goes for the allowing a rising trading volume of their shares who are sure or assured as far as their future prospects are concerned. And as these number of companies or this type of number of companies is on the rise, it giving a signal that compared to many other countries in the world, probably my economic recovery would be faster and sooner. It is starting sooner and it is at a faster speed. Is it not a good trigger for a market to be at a 52,000? If not the trigger, at least a reason. And it is getting segmented or it is getting exhibitioned by another rising trend of a merger and acquisition is concerned. It is not that only Tata Group takes over big basket. It is not that Reliance initiates its discussion with Future. Unfortunately, it gets tangled into some sort of a court matters or court procedures. But these are not the solitary instances. Probably, certainly, we may be cautious as far as the speed at which the Sensex is rising. But at least we must analyze who and why are investing in our market. If we are courageous enough because of confidence, if we are courageous enough because of our careful analysis, probably this is the market which we need to look at. Not only with awe and not only with concern, but certainly with some level of confidence and careful analysis. I hope that as far as this episode of Market is concerned, that would not only allow you to introspect, but probably give you sufficient food and ammunition as far as your future investment actions are concerned. Thank you very much.